Everybody, morning, Larry, PD, Dex. If you want to chat with me like all of these, like Jason, Goose, John, Sergio, be a subscriber. Boomer, John, Ryan, and oh no, is my thing going to give me crap again? We'll have to see. Let me know if I start glitching out. This thing give me warnings like it did last week. I'm not sure. I think the Windows update did something. Glitched in the matrix. Anyway. All right. So, welcome everybody. Whew. Last full week of trading, right? Last full week. I mean, where did the year go? Golly. Is anybody proud of what they did in 2023? Anybody want to share some awesomeness or some not awesomeness? Either way. I'd love to hear how you're doing in 2023. And as we come down to the last basically 2 weeks, we have this full week and then next week is holiday week, and that's it. That's the wraps. Done with 2023. Hopefully I've guided you. For those of you that have been with me all year, hopefully I've guided you. For those that are new, thank you for coming and following. And, I look forward to a better 2024. I mean, I'm going to keep at it. Keep at her. So this is not the end. It's the end of 2023, but looking on to new beginnings. So we've got 2 holiday weeks coming up. Christmas is closed on Monday next week. So I'm not going to be live. Just not going to do it. And then the following week, we have the 1st. Market's also closed that day, and I'm not going to live stream either. So I got 2 Mondays off. So I guess we'll have Monday on a Tuesday for the next 2 weeks after this week. And yeah, awesome, John. Learned a lot. Haven't blown up account. Hey, it's always a good start. And just making smarter decisions. So now is the time of year where I look at what I did, kind of make a plan for the next year, what I plan to do. This is where the whole it's not being wrong that costs you money. It's staying wrong. That's where that kind of came from, and is me reevaluating how I did over the year. So I do suggest you kind of look at the counts, look at where were the is there any kind of pattern to the trades where you lost? Like, were they from any particular guru? Were they any particular type of trade? Were they in like that's where I've identified my low price stuff doesn't follow the patterns. My leverage stuff doesn't follow the patterns. My biotech stuff, I don't like it. My China stuff, China's like a hot stove. I almost always lose money there. Then there's ones like I don't usually ever trade Facebook, which is now Meta, because I typically lose money. Same on Lulu. I don't typically trade LULU because every trade I've ever made lost money. So one of my favorite tickers in the past was GMCR. I made tons of money on GMCR. That's Green Mountain Coffee Roasters, which has now become Keurig Dr. Pepper, I guess, after going private and coming back public. And, it's just a time for reflection and looking at, now's the time to account and look at how your year went in your accounts. And if you're not happy with it, start planning for changes. And so anyway, I digress on all that. I'm not trying to give you advice. I'm just, it's just a suggestion. And, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, and fun. It is not a recommendation to buy or sell any financial instrument. And if you desire personal financial advice, you need to hire and consult a financial advisor. I may never get this all right again. Don't trade, all right? Don't buy stocks, don't buy options, don't buy futures, don't buy Forex, don't buy cryptos, don't buy bonds, don't long them, don't short them. Don't do anything based on what I say, all right? Please. Make your own decisions. I'm just a guy sharing what I see, trying to be a little entertaining. And, I'm better than Jim Cramer usually. That dude gets it wrong a lot. Anyway, So thank you for spending your morning with me. Hey, Patrick. Hey, Don. Some of you do make quite a bit of money off of these crazy predictions I do. So uh, thank you for following. Thank you for being here. And yeah, so I look forward to keeping this going into 2024. As we pop onto the calendar, and I'm probably going to have to refresh it here. Like I said, last full week, and we look here, nothing on Monday, nothing on Tuesday, nothing on Wednesday. Well, I guess we have consumer confidence, but nothing really. We get some final GDP numbers on Thursday and some core PCE on Friday. But from a relative standpoint, there's not a lot of economic news this week. Not a lot happening here this week right before Christmas. And yeah, so all right, where are we going? What are we doing today? So self-reflection, that's kind of this is my time of the year for kind of looking at the accounts, looking at what I've done. I'm proud of my green light income alerts, 100% win rate. I'm proud of my beta program, which is Bito Beta, BITO Beta. That has a 100% win rate. I'm proud of my the only people that know about this one are the people in my VIP group. Proud of my gold trade that I've been doing weekly. I have a weekly gold trade, and that one has a 100% win rate. And that was about as dead nut simple as it can be. I mean, it has one sentence to define the strategy. And anyway, it's been a 100% win rate since I've started following it. And then I have things that a little less awesome. Day trading. I'm not the best at day trading. I'm just not. Anytime I try, I tend to get chopped up a little bit. Yeah, sometimes I get lucky, on those 100% win rates, but sometimes I don't when I try to day trade. Especially, I have this habit of I'm gonna make that money I just lost back on the next trade. I mean, we all get in that mindset, and then you lose more, and then you dig a big hole. Anyway, S&P right here, right up to the limit, and apparently I forgot my headphones today. That was cool. So, right up to the limit. Right there on Friday. Look at that. Look at that. Right at the end of the week. And then Friday, pulling back just a hair. We stopped right there. 2 days so far. Now, the four potential paths. Right? 4 potential paths right now. Path number 1. I mean, these are in no particular order. There's no high probability path at the moment. I guess I would slightly edge out a pullback over just running higher. This is only like 40% likely that we just cruise on higher without getting a pullback. So, and that would include this path and the going sideways and popping. So maybe 60% likely that one of these 2 paths is what we take. One of those is retracing back to the breakout point around 4,600. And then running on up to the 1618 at 49.17, which would be an all-time high. All-time high sitting right here, right around that 48.15 area. Go look right back over here. Yeah, right there. 48.15, 17-ish, So that all-time high sitting right there on the S&P. Pull back here, we can shoot up. Now, we may just grind sideways for a couple days, 4 or 5 days into the new year, possibly, then pop it. Or we could just launch. But with the absence of any kind of catalyst coming up, I don't see us just running higher. So Goose had his best year recovery acceleration, largely off the roadmap line and counter trend. That's beautiful. Love it. So anyway, then the other potential is to retrace to the roadmap line. We haven't been down there since basically November 1st when we popped off of it. So almost 2 months. And when do we hit the extreme greed mark? That's the funny thing right now. Bank of America, not really. I mean, we can Google the fear and greed thing really quickly here. Fear and greed index, CNN. You usually throw it up here and oh look, we're creeping in. That was the last piece I was kind of waiting on. Like, we have some extreme greed creeping in here. Bank of America is usually the most quoted one. We're not extreme. We're just at the low end of extreme. And S5FI made the higher high, pulling off of it a little bit. All right. Jeff Henchman says, JT, to join your Discord, we register on the link in your video. Just in the description down there. In the description, it's $5 to buy the market roadmap, get the roadmap line, and in the members area, there's a link to get in Discord. When you get in there, you got to follow the rules, and especially specifically rule number 9. If you haven't followed, for those of you that get in there, make sure you read the rules and then follow rule number 9, which gives you very specific instructions on something to do, like put your name into a specific channel so that you can be verified for access to all the premium content. There's I think we're almost up to 70 channels of premium content now. For various subscription levels and stuff like that. So the VIP people get the most, and that's my inner circle VIP group. And it does cost a little bit of money to be a VIP subscriber. So, and on that, don't buy, don't sell stuff. Don't buy anything from any guru that you don't trust. Just throwing that out there. Make sure you trust people. Make sure they're giving you somewhat reliable information that's actionable. I mean, there's a lot of people in this industry that don't even trade, if you can believe it. They just talk about what you should do with your money, and they don't even do it themselves. So, just amazes me constantly. So that's the path forward on S&P. We're about 2 minutes away from the open at this moment. If you're watching later and I'm no longer live, you can leave comments down below or come join me in Discord, either one. So, ES hovering. And this actually got ridiculous. And I'm going to actually reload. Let's see. There's the market roadmap list. I thought I cleaned this all up on the chart this weekend, but apparently threw it all back on here. Awesome. Love it. Love it, love it, love it. And I'm just going to, you know what? Let's just clean this baby up. Start afresh. Start anew. All right, right here. High right there. Low right here. Look what we did. And we're sitting there. Simple as that. Now, when we zoom out right here, this is a bigger picture pattern. See how we bounced on the weekly? Jump up, go from the high right here to the low down here. There's our new target right there. There's the market open. I heard the bell on the other room. So 52.41 might lead to a bigger pullback. So you're like, JT, what's the outlook going forward? We got 49.59, 52.41, and a little bit of confluence up there with a 272. This highly unlikely we just go like this. Highly unlikely. More likely, I mean, look at the weekly. Like, we get some weeks of pullbacks, and then we go, and then we get some pullback, and then we go. Probably going to get some pullback. This is like 1, 2, 3, 4, 5, 6, 7 weeks in a row. Straight up. When's the last time the S&P did 7 weeks in a row straight up without a red week? I don't know. I was looking back through here. I'm not sure. It's been a while. So, can we expect a red week sometime soon? Yeah, probably. Hey, Chris, I don't recognize your name. Welcome. Welcome, welcome. Patrick, glad to have you. You on an airplane this morning? Yeah, Yeah, so if you're not confident, just paper trade. Sledge brings up a great point. If you're new at this, if you're not sure, you don't have a consistent win rate or whatever, paper trading. It's a awesome idea until you build some confidence in what you're doing. So prove it to yourself. Get 15 wins in a row, and then think about putting real money on it. But very, very, very small real money. Goose was talking to me about something this morning that something happens to you when we start looking at money. We all know that there's statistics involved in losses and things like that. And, particularly like the Navy leaves from port and they know there's going to be a certain number of people die before that ship comes back. Now, the Air Force knows that they're going to have so many fatalities per 100,000 hours. The FAA tries to regulate us out of so many deaths per 100,000 hours in the private pilot industry and the airline industry. But it keeps creeping back because there's randomness, there's failures, there's things that happen that you just can't regulate your way out of. But something funny happens when we start dealing with money and we get emotional and we start making decisions based on emotion instead of just looking at the way it is. And that ties back into what I was saying about evaluating those things that, like, what are you drawn to that you keep losing money at? Like, if there's something, if you can see some sort of something, like, I always trade Lulu and I always lose money when I do. Don't do that anymore. Like, just put it on the blacklist. Paper trade it or whatever. Maybe that's the one you buy one share of instead of putting a full load on. And see if you can change how it operates for your account. Just not taking big losses can be a huge change in a lot of people's trading. So right here, so far, that size pullback, this is interesting to me. So on the weekly here, we definitely got above right here, and we retraced back down in here. We got above that 618. It makes it 70% likely that we're going to hit this 5241. And just like the 3-day when I was talking about this recent pullback, zooming out, just looking at the bigger picture. When I was talking about this pullback, when we got above that key resistance level, made us 70% likely we were going to hit 4769-ish right here on ES. This is the S&P 500 futures. It's not the cash index. So when we pop over the cash and we look at it, this chart has definitely got a lot more stuff going on here. So we pop out and we look at it here. I've drawn a lot of stuff. And we remove a few things. We go from that high down to that low. We can see 5267. I mean, this has become 70% likely we're going to go up there. All right. And just keep your time frame and plan in mind. So yeah. So Hubert Centers calls it the pucker factor, when you can lose money on a trade and just, you got to be at peace. Like, that's the big thing. If you can be at peace, total peace with all your trading, sleep at night, you're doing it right. If you put on a trade and then you're worried about it, if you're the type of person that's got to ask me about a trade 900 times while you're in it, you probably got too much risk on that trade. Just being honest, all right? If you can let it fly and do its thing and not worry about it, the one that people have brought up a whole lot of times, this one, there's no change. Like, it's still just sitting here doing its thing. It's still 70% likely to go pop up 73. I've had so many people ask me about this since I put it out as the chart of the week a couple weeks back. Nothing's changed. It's just consolidating right there. And still likely to pop up here. I'm sure a bunch of people asked me about this one for long. That one's about to kick off the more conservative entry. And it keeps removing all my drawings. That's pretty sweet. We have the 24 area and the 25 area up here as targets. So NQ right here, getting a little push higher. Yes, getting a little push higher. S&P 500 opened a little higher. Still not making higher highs yet. Be cautious. We may rally into the end of the year. There's trillions of dollars sitting in money market funds that people are getting the FOMO. This looks like FOMO. Could we rally through the end of the year and then, similar to what happened back here, all the way in 2021, we rally right up into the end of the year. A little bit rocky in the beginning of the year, and then yikes. Yeah, that could happen. We could get a nice big fat pullback. I'm not saying we're starting a new downtrend. Just saying that we could get a nice big fat pullback in the new year once the slate's clean for the year. All right. So just looking at seasonality and stuff. Let me see if I have a thing where I can pop that up quickly. I keep rearrange, like my tabs rearrange every time I reboot, which Windows updates just keep installing. There we go. Seasonality. I mean, this year was a very typical year on seasonality. We're getting this decline in volatility. Maybe it's bigger than normal, but this has been what it did. Like, we topped out here in October. And I mean, look, volatility, like the market went down from July right through October. We bottomed out right at the end of October, and then we've been right back down. That's volatility S&P. You can kind of like look at this almost an opposite indicator of the market. We typically bottom out right early in January and then experience a volatility spike. Russell tends to rally from late October through about Christmas. Then we start out the year a little rocky. NASDAQ. We tend to rally from October through the end of the year. This has been a very typical year. Then we start out a little rocky. S&P. We tend to rally from October through the end of the year. These are all 20-year patterns, all right? This is taking the last 20 years, throwing it together onto a chart. And this year, this scooted over, and we've gotten a little acceleration. We actually added a lot more percentage, than going, adding almost 7%. We've actually added like, close to 15% since October. So outperforming this year. But just keep it in mind, all right? The patterns are the patterns, and they tend to hold true. So beginning of the year, probably a little choppy. March through May, probably a good period. Summer months, a little choppy. Come back in somewhere September, October, and we'll be rocking again. These are the 20-year cycle. 20-year average here. Piled up 20 years of data. More often than not. That's your, it's like your 8% a year gain in the stock market right there. Big tech tends to be some of the better companies. Throwing on close to 14%. And Russell actually outperforming also. The 20-year average throwing in about almost 12%. So S&P, kind of a underperformer. And the volatility, of course, the cycles, the spike cycles. Any questions on that? You can let me know. But I can't argue with the fact that we'll probably rally. We could grind on higher here right into the end of the year and then get that choppiness. We could make an all-time high, possibly, before the new year. I'm pretty confident we're going to make a new all-time high into 2024. All right. So anyway, I feel like I've talked about a lot of stuff that's not the market here. I mean, it's the market, but it's not the market. Russell showing a little softness. That was one wicked move up. We went from a 52-week low to a 52-week high in the span of about 48 days. That is a new record. That's crazy. 52-week low to 52-week high in the span of about 48 days. And that's only 33 trading days. So if you think the market's been crazy, well, there you go. There's crazy. Definitely crazy. And when we just zoom out and look at this, clear all the crap off. Had a lot of crap on the charts for a long time. That was the lowest low. Could that be the bottom? Yeah. Move up. Once we get above this area right here, look, it's where we initially found resistance when we on the way down. Resistance, resistance, resistance. If we can pop up through this, it becomes somewhat likely that we see an extension out to the 272. And that's IWM. If you don't know what RTY is, right there. I don't tend to trade bonds, so that's not one I focus on much. And they're also rallying. So we're seeing a lot of money flowing back in after getting beat down. So Russell has opportunity to outperform some other ones that are interesting, like EEM. Made that low back here, kind of moved up, had a consolidation. That looks like a very three-wave corrective. Look at this right here, right to a potential measured bounce. If we start breaking out above this, I mean, that correction right there, we could be looking at a move up into the 64 area on EEM. Nice potential there. Got some resistance to get through. And look at the measured bounce fib and see where that lines up. Yeah, puts us up prior high at the minimum, if not breaking on out to new highs. So that would be the wave 3 up. We'd probably get a retrace and then pop the 5. 1, 2, 3, 4, and 5. Oil. It's the same patterns all the time I'm looking for. Basically the same two patterns. Look at this. I added some oil last Thursday. Added some oil exposure. And if we get the retrace, I'll probably go, top up my position full boat if we hold the higher low and start up again. So that looks pretty positive. I think we're going to go higher. I think, like, as I've talked about, this may be the driver for inflation coming back, and they having to raise rates more. So they kind of jawbone the market, and the interest rates pull back, and we saw the market rally higher. And then on Friday, Williams or whatever came out. Whoa. We didn't actually talk about cutting rates next year. We're still, maybe we're not going to cut rates as much as we talked about, blah, blah, blah. Well, I think that the market rally got a little too spicy for them, and they were like, yeah, let's rein everybody in a little bit. So if inflation comes back and they've got to raise rates more, we could do this sideways thing I've talked about all the way back a year ago, and then start raising rates again. So entirely possible out there. I would watch for a break below this level right over here. It's the same color, so let's change the color. Watch for a break below that. If the DGS2 breaks below that, something's up. We're probably going to do this, and the Fed is probably going to cut rates at an alarmingly fast pace if this happens. So this is the key line right here. So if the DGS2 breaks below that, watch out. If the DGS2 breaks above the Fed funds rate, they're going to raise rates more. Simple as that. The Fed's always chasing. They're not the market leaders. Fed's always chasing the market rate. There's your market rate right now. It's dropping quickly. And we did have a quick drop over here, made a higher high. Do we make a bigger higher high? Or was this at the top for now? Not quite sure. This one doesn't follow Elliott wave really, so. Gold, oh, on the wrong chart. Go back. Gold is churning right here. Here's the thing to watch. Jump down a time frame, or 2 or 3. We've had that nice move up right there. Low to high. If we come down right back to this level, hold support right there at the top of the box, break back above this right here, right where we're consolidating, it's game on. I don't even know what color I used to have. There we go. That'll be the game on point right there. Going higher. If we break down below this, probably going on down, at least to the roadmap line on the daily. I had to zoom in because you can't see all that crap on the daily chart. I mean, you can, but it's 3 candles. So watch for that bounce. If we bounce there and break out above that level, probably going significantly higher. 2,500, 3,000. It could be $5,000 an ounce. But it's going to take years to get there. So this is a key pullback area right here. Bitcoin, back in the channel. Watch out. We're probably going to come back to the bottom of the channel at this point. Getting back in the channel. Tips the odds to going back to the bottom of the channel over the next few days. And then we'll see what happens. This may line up with my Crypto Unleashed pattern, where we kind of dip down through the day after Christmas. Ethereum looks a little more bearish. It has a 1, 2, or an A, B, potential C. That could take us a little deeper here. A little deeper here. Get my marbles all mushed up in my mouth. And Kimberly, I saw you. Morning, my dear, my lovely wife, Kimberly. Saw you on the chat. Why Ethereum made me think of Kimberly, I'm not sure. But that looks like it's going to continue down a little bit more on Ethereum. A little more softness. And when we kind of zoom up, zoom out, look at the bigger pattern here. I have some concerns. I have a lot of concerns. Let's just clean it up. High to low. We've come up right into that 618 area here. Come up into the vicinity here where we bottomed out back here. If we were to turn down here, this could lead us to a bigger downturn. And this could do this without Bitcoin following along. Like Bitcoin can rally while this one does this. Yeah, we're talking like 400 or 500. That's not awesome, right? So Very cautious here. Bitcoin does not have this pattern going. All right. Bitcoin's doing a different thing here. We already made it above the 618. It's already tilted it. 70% likely we're getting the 108 at the minimum. And it could be 187. And typically, we 10x the low, which is 15,000. So that'd be 150 to 20x the low, which would be on 300,000. Why why am I talking like that? Well, this low right here, 3170, do a 20x on that, 62,000. Look where we popped up. Oh, look, we got that. So we 10 to 20x the low on the next run in the halving cycle. Our low was 15. So I expect 150 to 300,000. Ethereum doesn't have that kind of pattern. And they went to they fundamentally changed Ethereum here in September of 22. And it hasn't been as awesome ever since then. Highly cautious. If we can get above the zone, not so cautious anymore. We do have that gap down in there too. So be very careful on Ethereum. I was kind of bullish for 2,500. That puts us right up in that zone. So watch for the mini pullback here. We need to extend. We need to get above this and really above this too. All this consolidation right there. Need to get above all that stuff to really show we're going higher on Ethereum. It does have potential, like 75, maybe 13,000, but it also has that potential right now. So neither is high probability at the moment. Dollar showing a little support here at that trend line. Thought we were going to push on through. We rejected it right back up. Softness, if we can break down below it. You know, the new, we got that part. We did that. We did that. So just happened to get lucky on resistance and support. Sometimes I get lucky. I don't know. I mean, JT, how'd you know it was going to do that? It's not that difficult when you see it happen over and over and over across many different charts. So now we've back tested this trend line twice. If we break above this roadmap line area, that's bullish for $1. If we get below this trend line, we're probably going lower low than we had right back here. All right. Get below that low, probably coming down here and probably going lower. Simple as that. X was a buyout. Nice, beautiful pop. Nippon Steel from Japan, from the land of Japan, has offered to buy them out for a gazillions of dollars. It's like a U.S. Steel, 122-year-old Pittsburgh icon. And really, they've kind of not been as focused on the U.S. in the last, say, 20 years. I mean, it's a shell of what it used to be. And they made an all-cash offer here. Nippon Steel cinched a deal to buy U.S. Steel for $14.9 billion in cash, prevailing auction. So they were already auctioning themselves off. So, think what you want. That's incredibly stupid of us to put all of our, say, commodity production into offshore and not have any domestic with any type of capacity. Just a strategic mindset. It's if we get in a war, we're screwed. That's the bottom line. Anyway, It goes way beyond this deal. I We're pretty much screwed. Anyway, now nice pop. I mean, you just look at the plain simple numbers, and 869 highly likely. X, well, it's right up to the target. You know, pop that 1272. Don't expect any higher. And see how close the 14.9 billion. Yeah, so it probably popped up right to the buyout price. It'll probably drift up slightly to the 14.9 billion valuation as the deal is done, but all but done now. Adobe got a little baby retrace. Still hasn't tested the all-time high. I expect some resistance there, and then extension out to 817. EDU keeps being a monster. I do expect a pullback. We haven't really pulled back since June. We went on a monster run, pulled back, monster run, kind of expect a pullback. More resistance up here. ILMN still below the roadmap line. Not overly bullish at this point. NUE 194. Actually a little higher. That's 70% likely to get 197-ish. Remember, these are fuzzy zones. Be conservative on your targets. I mean, if you want to be aggressive, you go for 215-ish, 210. But yeah, that's OIH has been on my list for potentially turning bullish as oil breaks out. We'll have this downtrend line to go contend with. Right now, we're contending with the roadmap line. Get through that. Next resistance right up here. Then we can look for extensions. STLD, Steel Dynamics. It's about 70% likely to go visit 149. PGTI, look at that, right up to extensions on that big prior move and this current retrace to the roadmap line. Yeah, getting extended. And I would be careful. That one's getting way extended. A little overexcited on the upside. And building products definitely getting a little crazy here. A bigger pullback that we experienced from 21 through low here in 22. Interestingly, bottomed out back in the summer. That's coming up at 40, which that's the 1618. I wouldn't expect a whole lot more. Nail. That one's getting extended. Looks like it's starting to pull back a little bit. So home builders maybe a little overcooked on the upside. PXD looks like it's potentially bouncing. That next move up. Potentially put it right up in the target zone for the bigger pullback that happened back here. And the 1618 lines up with the 1272, which, you know, on the bigger time frame, we're talking about the weekly chart, I think. Maybe in the monthly chart. Yeah, the weekly chart where we bounced right there, come up above the 618. Like 70% likely we're going to 284. How long is it going to take? Well, it could take a little while. Push on out to 2025. Riding this uptrend right now. Late 24, early 25 could push us on out to the 1618, 325. ZIMV. Nice pop. That's kind of a downtrendy, sidewaysy, I wouldn't mess with it kind of pattern. Losing money. I mean, look, that's just been doing nothing for a while, and IPOs are bearish and made the lower low. Is this the reversal? Was this the lowest low? Could be. Looks like it's potentially reversing here. Breaking above. Probably good for at least 20, if not 27. If we're going to be bullish, it could go up to 40. So ZIMV, the med tech specialty. So be careful. Biotech junk. Loses money. Yeah, ZIMV, ZIMVIE is the company there. Sledge. Pop it up. It's like dental, spine. I'm not sure how dental and spine work together, but hey, whatever. Bone healing resources. So, I don't know. NVO, GLP-1 drugs, probably going to save the world. That one's going to continue to chooch on higher. Why would you expect anything different at this point? My channel. There. That one, and you know what's outperformed AI? These two. Lily and NVO. I mean, look at that baby go. Look at that. I want to feel like you missed out on something. Look at that. I mean, where was COVID? Not on here. This one's been that one had a COVID drop, but I mean, look at that baby go. So, I mean, there's always something that can be humbling out here. You want to feel like you missed out on something. I mean, look, 600%. You could have bought shares and made 600%. Craziness. And we're just getting started in GLP-1 drugs. Like, but be careful if there's any crazy side effects or something that cropping up that killing people. But at this point, you know, 758% right there. I mean, that was a crazy ride. HES. So it's not about what you miss. Just focus on what you can take advantage of. That was the point of that exercise there. HES right here. Beautiful potential. We get above this gap down. 175, 186. And I have a bigger target probably from the prior pullback back here. Throwing it up in that area. Confluence. XOP. Thinking. Computer says no. Apparently. Awesome. There we go. XOP. Another one potentially bouncing. And let's just clean this up. Save the list. So this one's been sideways. This is the cautionary tail here. We was slightly drifting up. It's not nearly what we had back here. We had a strong up. We're kind of, and we're kind of going a little flatter on the up. Still kind of stinted up, but look, we haven't made a higher high since back here in June last summer. Like not this past summer, but 18 months ago. Be very cautious. I wouldn't really be interested in this until we get above this kind of resistance right here. I really want to see that get up there before we do that. STNG. Nice little pop. That's got the adjustment on it. Figured out what was moving some of my charts is that adjustment button down there. Coming up to the prior high resistance. We get above that. 70 be the upside. ZJYL. MedTech Specialty. That's why I say be freaking careful. 48%. Poof. Gone. Oil. That one looks bad. NG1. Did it find a bottom? Maybe. Did a 786 retrace. If we can get back above that consolidation, we might go higher if it turns down. So watch for right there, that level. If we can get above that and above the roadmap line, probably going higher. If we turn down right there, probably coming down here. If we can break above this, might be worth a long. CVX probably come back up to the roadmap line there. Starting to get a little higher than kind of speculated. We might see a retrace and a further drop. Could still happen. Come on. I just removed the drawings. Freaking, come on. So when you look at this right here at CVX, look, we had a move down, we had a retrace, and we've had this next move down, which doesn't look complete. It has a 1, 2, 3. That could be the 4 or 5, but it doesn't look like it based on the size of this. This looks like it may be the 4. As long as we're below this low right here, we still have potential to make a lower low than this right here. It doesn't even have to be very big. It could just be one more tap. I'm sure some of you are sitting there going, what the fudge are you even talking about? Well, look, it's like this. You go 1, 2, 3, 4, 5. You don't want the 4 to overlap the 1. And that's part of the bigger correction that went like this. A, B, and potentially a C right down there. That was like 3 waves down, 3 waves up, and 5 waves down. That's the way ABC works. And it could have been, it very well could have been that the A was here, or the 0 point was over here. That could be the A, this could be the B. And this be a 1, 2, 3, 4, overlapping, and 5. So it could be complete, but it looks like it'd be better like this. Anyway, see what happens on CVX, DPST. Trying to break above the resistance. It's got another little gap right there. We're going to need to fill. This is a 3x leverage. Leverage stuff doesn't always follow my patterns. Be careful. ERX. Another leveraged energy. That just looks like choppy sideways stuff. Don't mess with it. SMH, right up to the target. Got more than one on there at this point. Watch out for a pullback. That's what I would say. What does that mean for semis? Well, watch out for a pullback. That's what Nvidia could go down while AMD still runs for its extension target. Intel looking strong. AMD, you may be like, what are you even talking about? AMD, 140 was my first target. 150 was kind of the ultimate target. Nvidia could pull back here. We're right back up near the prior, right back up in that zone. Right back up in there. If we turn down here, probably break down and retest the roadmap line, if not going lower. So XME, right up there. Remove the drawings, save. Hopefully these save. Look, that's been sideways. Like, hard to do anything. That's probably breaking out on US Steel popping. I mean, trying to break out. It's not really a breakout though, because the high was here in April. The low was here in July. And it's been lower highs and higher lows ever since. And it's basically just a giant squeeze, watermelon seed squeeze situation. And we're just trying to break out. If we could successfully break out, we could see an outsized move after all that consolidation. Could take it up in that 97 area. CLF, Cleveland Cliffs, probably kind of bummed out that they didn't win the bid for US Steel, I guess. Just sideways downtrending. I mean, look, roadmap line is doing that. Bearish. Could it reverse? Yeah, but I'd wait for the roadmap line to be showing me it's going higher. XOM, not looking awesome. That one doesn't look like it's going to participate in oil rallying. GPCR, ouch. There's 50% of your value gone. That's why I say don't mess with biotechs. Med tech. I mean, therapeutics is kind of the tip off. It says miscellaneous commercial services. Let's be honest here. Structured therapeutics is probably some kind of medical crap. We don't typically name our company therapeutics without. Let's just see. World-class medicine by design. Who could have guessed? So even though they're not in the right sector, according to TradingView, somebody said something. Diabetes pill misses a weight loss. Imagine that. They effed up a trial and can't compete with GLP-1 drugs. Slam, 50% gone. Dashed. Crushed your hopes and dreams. I don't mess with those. It's like gambling, basically. Unless you know somebody. And then if you get caught insider trading, well, you're effed anyway. It's like the conversation we had about somebody last night while we were celebrating my son graduating high school. So we were talking about Martha Stewart. When you Google her, she comes up as a American businesswoman, not a restaurateur or chef or crafty lady. She just comes up as an American business lady. I was like, I guess at the point where you go to jail for insider trading, you become a business person, not any kind of chef or crafter or whatever. It was an amusing conversation. So anyway, only about 100 people left on the stream, so I'm gonna try to wrap this up here. Been going long. MDB potential 476, 528. MSTR. Watch out for a pullback. We're kind of at the limits here. BLK. That one may rally back up to the all-time high. Race. BLK may respond on the Bitcoin ETFs. So it's already looking pretty spicy here. Already getting to be 70% likely we're going to 1156. Breaking above these highs at the 618. I mean, you could probably plunk down a share and ride it up to 1156 if that's how you wanted to operate. Race, watch out. That appears to be kind of trying to top out here. I will watch for a bigger pullback. MIRM did get a pullback. That's pharmaceutical medtech stuff. SEDG, just bearish. I wouldn't mess with it. PANW, probably do a pullback. Watch out. Roku, the list was long today, and I've been just rambling. I feel like just talking, unloading my market information. Probably come back to the roadmap line as I thought we might. Watch for support right here. If we turn up, we can go higher, but watch out. We may go for the deeper retrace. Affirm, pulling back, but that may have just been a retest of that box before we push to the next level. The next level, probably right up around here, where we consolidated over here. EBIX. Whew. Probably going to go bankrupt. EMPH up to the roadmap line area. Watch for it to turn down again. That's right into resistance, right into where we consolidated just a couple months ago. Coin needs a pullback. It's basically at the extensions, depending on how you do it. If we do it this way, right at that 1618, that usually results in a pullback. SWPR, going to come up and test the roadmap line, more than likely. Could come up short. Then we'll see what happens. All right, that's the list for today. That's what's happening, what's crapping. And as I said in the chat there, if I said anything that was helpful, give me a thumbs up, and I'll be back with you tomorrow. So thanks for watching. Thanks for coming. Thanks for spending some time with me. Remember, the account you save may be your own. My bias for the day, kind of thinking we may just grind higher into the end of the year. Bye for now.